The FTX incident has hurt many people, myself included. It has damaged the reputation of the crypto community and set us back from mass adoption perhaps by years. In this video, I'm going to break down the impact of the FTX fallout and potential regulations from the US government, the hesitation from the institutional investors, and analyze whether crypto is still a good investment heading forward. First and foremost, the FTX scandal was done by one bad actor, Mr. Sam Bankman-Fried. Now, details are still coming out, but there are rumors surfacing that Sam Bankman-Fried took client funds, client deposits into the FTX brokerage and used it for his personal use. Basically transferred the money into Alameda, his second company, and borrow money from Alameda and use those money to buy things like real estate in the Bahamas for his parents, for himself, and for his employees. And he used the money to do other investments like making contributions to the political parties. Now, all of this is still under investigation. Nothing has been proven, but the rumors are out there and it's hurting a lot of people. This sort of Ponzi scheme behavior isn't unique to crypto. We have heard of it from Bernie Madoff, who siphoned client funds and created a very similar Ponzi scheme, but he did it on a much bigger scale. He had around $36 billion of assets under management, and at the end, only $18 billion were returned to investors, so about 50%. And now here comes the first impact to crypto. Even though Bernie Madoff created a similar Ponzi scheme on a bigger scale, because he's a hedge fund manager and people are more familiar with hedge fund and stock market and how everything works, nobody really hesitated from investing into stock market, and nobody really hesitated into putting their money into hedge funds. But since crypto is so new, it made very few people very, very rich, making them billionaire, multimillionaire, and people who didn't get on the boat or who didn't have the opportunity to buy into crypto early on became cynics. And once they start getting on, they face an incident like this where FTX takes away their money and use it for their personal spending. That creates a mistrust, a distrust in the community, and that hurts investor sentiment greatly. It damages reputations of cryptocurrencies and it prevents other people, smaller investors, from getting into it. But not only does it hurt small investors, it also hurt big institutional investors. Now, big institutional investors, they weren't really on the first boat to get on crypto. There are very few of them who wanted to get into crypto in the first place. They all believed that it was a big scam and nobody wanted to make the first move. But once people started making moves in 2018, 2019, tons of institutional investors started piling money into it. Unfortunately, when you're an institutional investor, you have a lot of money because you're controlling money of other people. And this FTX incident hurt the Ontario Teachers Fund, which is the retirement fund for teachers of Ontario, Canada. I imagine the fund manager is under a lot of scrutiny right now because he lost money of public servants, lost money of teachers who work their entire life depending on the pension. But we also have big investors like Sequoia losing $200 million, Paradigm losing $278 million, and they have to have a hard conversation with their limited partners, people who invested in their funds. This really sucks for crypto because in order to have higher prices in crypto, we need institutional investors. We need people who have a lot of funding, a lot of money to invest into the project, invest into the infrastructure. But now, as you can probably imagine, when you're making a decision to invest in a crypto project, your limited partners, your LPs, people who put their money into your funds will give you a call and say, why are you investing in crypto? It's all a scam. Because the damage the FTX has done has caused a lot of people who don't understand it call it a big scam. The last thing you want as a fund manager is your partners calling you and asking you why are you making a particular decision. That puts pressure on you and you have to make a decision to say it's probably better to find alternative investments other than crypto. And since so many institutional investors got hurt in this incident, what we can imagine or we can predict next is that the US government will step in. They will create more regulations. Guess what? The government will step in only when big players get hurt because the big player have the influence. They will start lobbying politicians. They will start creating efforts and movements in order to achieve a more regulated cryptocurrencies. And from my perspective, it has both benefits and disadvantages of having more regulated crypto environment. Let's talk about the bad things first. One big disadvantage of having more regulation is that you're losing the purpose and the philosophy of cryptocurrency, which is decentralization. You're having more centralized control from the government, more centralized control from the exchanges, and they will require more KYC, know your customer regulation, more AML, anti-money laundering. That means that you have to basically identify yourself, for every crypto that you buy, every crypto that you sell, every crypto that you exchange, where you spend it on. Basically, you will spend crypto like it were a bank account. And you lose the privacy nature of cryptocurrency. And that defeats the whole purpose of a decentralized blockchain. But there will be some good things that come from it. For example, stricter regulations and requirements on crypto exchanges, having a higher standard of audit requirements from a reputable CPA firm, making sure that all controls and client funds are in place so investors don't lose their money to silly incidents like this. They may also require true separations from US entities from their offshore entities. For example, FTX US will be completely FTX US and have no control or association with FTX US other than the name and brand. All the assets should be under FTX US only, and no one else has access to them. They might introduce protections like SDIC and FDIC, so funds within the crypto exchange are backed by the US government. They might require some sort of stable coin like USDC or this new digital coin that's introducing by the Federal Reserve. As long as those funds are on the blockchain, it can be audited and can be monitored. If the exchange fell for whatever reason, or if the bank fails for whatever reason, those funds are guaranteed and backed by the US government, and they will protect the investors and depositors. What I foresee from this is that the US regulators will probably come up with a big package including both the good things and the bad things that I just talked about and put it into one big bill. So if you want more protection for the investors, you have to lose more privacy in the process. So it's really a fascinating topic that I look forward to understanding, and I want to see what's going to happen in the next few years. Now let's talk about the impact on crypto prices. From my perspective, in the past few years, cryptocurrencies made new highs because the Federal Reserve kept the interest rate near zero for a long period of time. With easy access to cash and money, everybody was looking for a way to invest into an asset. All this talk about Bitcoin being an inflationary asset, uncorrelated asset to the stock market has all been proven wrong, because what we've seen so far is with the interest rate hiking, every stock, every asset, housing market all fall in prices, Bitcoin and crypto included. Now the Federal Reserve is keeping the interest rate at a high level for the foreseeable future. What is probable is that it will cause a suppression on the price level on cryptocurrencies. Along with institutional investors' sentiment at all-time low, I'm not sure if crypto is going to make a new all-time high anytime soon. Investors now are looking for things that generate cash flows, that pays dividends, that has a proven value, a track record during recession. And crypto is just too risky for that. But there is a recent report showing that Bitcoin holders are holding to their coins. They're not selling. And I think the crypto community knows and been through this before, and they know how to hodl. Once the sellers run out, last person has sold, that's when we make the bottom. And I think that we're nearing that very soon. Here are some big events that's coming up that might have short-term and long-term impact on crypto prices. Number one, Litecoin halving. Litecoin halving is happening within the next 200 days. Now, if you have never heard of Litecoin before, it basically you can consider it as the poor man's Bitcoin. For the new investors out there, halving means that the reward for mining Litecoin will be reduced by 50%. So by simple economics 101, if a supply is reduced by 50% but the demand remains constant, ideally, in theory, the prices should double. What we have seen in the past few cycles is that when Litecoin halving happens, prices of Litecoin, Bitcoin, and other crypto prices usually spike up about 1 to 2 months before the halving actually happens. Once the halving does happen, the prices will retrace back to a low level. And another event that will have a big impact on crypto prices is the December FOMC meeting that's happening next week. This is where the Federal Reserve chairs meet together and talk about how they want to combat inflation, what is their plan for interest rates. Now with the mixed report of CPI, PPI, and the jobs report, there is a debate whether they're going to raise rate by 0.5% or a little bit more or a little bit less. People are hoping the Federal Reserve will make a statement that they won't be raising more rates in the future but keeping it at a constant level. I think if that happens, that should be considered a very good news for all assets, including crypto. Personally, I think this is the biggest factor driving crypto prices. As long as we go back to a neutral rate environment or a low rate environment, crypto prices and risky speculative assets will have its run and people will make more, and institutional investors will have a better way to convince their limited partners on why they're investing in crypto, and their sentiments will rebound. And then we'll see a new bull market in the cryptocurrency. Next week, Sam Bankman-Fried is also testifying in Congress. I am very much looking forward to see what he has to say, how he explains himself to the committee. I think the way he presents himself on television will impact a lot of people who have their money in hedge funds. If he presents himself well, that means the fund managers have a better way to spin the story, to invest in crypto projects and companies. But if he presents himself like an asshole, he will deteriorate all investor confidence. People will question any fund managers who's making a suggestion of investing in cryptocurrencies, investing in crypto projects. I know the FTX incident is terrible. It has impacted a lot of people, affected crypto community in a very long-term way, but we have to look at this clearly. This is not the first time an incident like this happened. In fact, every time something like this happened, news reports always come out with an article saying crypto is dead, Bitcoin is dead. In 2014, the biggest crypto exchange at the time, Mt. Gox, they were dealing with about 70% of all cryptocurrency transactions in the world. And abruptly one day, in February 2014, they declared themselves going through bankruptcy because the funds they had on the exchange were stolen, siphoned off, misused, mismanaged. Sounds very similar to what happened to FTX. At the time, hundreds of thousands of Bitcoin were stolen and lost. It was worth hundreds of millions of dollars. After that incident, people were calling crypto is dead. Bitcoin sentiment was extreme fear. The prices of Bitcoin went from around $1,100 to around $200. But guess what? 3 years later, Bitcoin went from $200 to $19,000, making a 95 times return on investment. But guess what? 3 years later in 2017, Bitcoin's prices went from $200 to $19,000, basically 100 times its value in 3 years. From the inception of cryptocurrency, there were other major incidents that people will call is the end of crypto. Things like the Rodden network hack, the Poly network hack, Binance network hack, CoinCheck crypto exchange hack, hundreds of millions of dollars, billions of dollars in total are lost and stolen. Every time that happens, people are calling this is the end of crypto. But time after time, Bitcoin always bounces back. Crypto is not dead. Crypto cannot die. The fire has started, now we just have to patiently wait until the next bull cycle. A new all-time high in crypto is probable. And if you want to know how to pay $0 in taxes when you make millions of dollars selling your Bitcoin at an all-time high, be sure to check out this next video. Hey guys, I got my banana smoothie with granola right here. Today we're going to talk about how the FTX incident... Let me just finish this real quick.